Hello neighbors and friends in Glendora. I'm going to give you a quick real estate market update. My name is Marcus Ibrahim. I lead a team called Team Ibrahim, and here we go. This month we've got less new listings than last month. We have more active listings than last month, which is interesting because usually when you have less new listings, you have less active listings, but in this case, more active listings, which means things are not selling as fast as we would like them to sell. And that is confirmed by the days on market. The days on market were dropping in the beginning of the year precipitously, and now they have flattened out, which means things are not selling faster than they were, but they are still low, which is good. However, I just did a general Los Angeles market update, and I would say Glendora tends to lag by maybe 1 month. We kind of watch what's happening and then mimic. Now, months of supply are up this year, now up to 2.8. And I'm going to zoom out here and show you a longer graph. Months of supply means if you stopped supplying new inventory to the market and you just waited until everything that was on the market sold, how long would it take? And we're at 2.8 months, which is the same as 2020, but still below the previous years. So I would say still pretty healthy. Now, the holy grail, price per square foot. I would say the trend is still your friend. However, the last month we did have a little bit of a dip, and we will be watching that closely moving forward to see if it continues to go down or not. One thing I will point out to you is that annual cycle is for price per square foot to typically taper off in the middle of the year and start to drop towards the end of the year as people start to shift gears and focus more on the holidays and travel. However, I'd say we're following trend, so we're not too far off right now. But a couple things to look at in the greater market related to real estate is that mortgage rates have come down by 0.25% over the last 3 weeks. You'll see this graph here. Boom, 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 down. I think we'd say we're close to 6 3/4 right now. Now you ask me why, and the answer, I love this website, investing.com. It gives me all the economic data that I love to see because I'm a geek and a data nerd. But the reason, in my opinion, is that mortgage applications were down 4% week over week. So the last week, mortgage applications were 3%, 4% less than they were in the previous week, and the week prior was 1%. So the mortgage applications have decelerated more over the last 2 weeks. The second thing that I'm watching very closely is that ADP, the payroll company, tracks non-farm employment, and according to the most recent data print from this morning, there were 37,000 new jobs added to the economy, according to ADP, which is 1/3 of the consensus estimate, which was at 111,000. So the economists out there were predicting 111,000 new jobs, but instead only 37,000 new jobs. So that's less new jobs, which means less demand for purchasing goods and services like real estate. I hope this information is helpful for you. If you have any questions, please feel free to let me know below or send me a message or give me a call. And we do have a $20,000 grant, which is great for buyers, and it includes no PMI if you have less than 20% down. Fantastic deal. Absolutely the best, in my opinion, in the market in this time, and which also helps us to position your property if you're selling. So if you're buying and you're interested in the free grant, let us know. And if you're selling and you want us to check if your property qualifies for that free grant so that we can position your property better for buyers, please send me your address. I'll double check it and let you know if your property qualifies, and that will help us position your property in such a way that attracts buyers who are willing to make stronger offers because they're getting free money if they buy your house. I hope this helps. God bless you. Talk to you soon.